The market is being watched closely by every investor right now because of the rising prices and anticipation of hyperinflation. But there's someone who believes that we may be going in a very different direction. Who, you ask? Let's find out. Many of the world's finest investors, including Michael Burry, Warren Buffett, and Ray Dalio, have warned of impending uncontrolled inflation in financial markets. Consumers have witnessed this firsthand as prices for most commodities, food, energy, and services have skyrocketed. The Federal Reserve is among those who believe that inflation will rise in the near future. However, Cathie Wood expects deflation to return. Cathie Wood, the founder and CEO of ARK Invest, has earned prominence in recent years as the investment manager behind a successful set of exchange-traded funds that are avidly followed by Wall Street and Main Street alike. Cathie Wood is one of the few skeptics who believe deflation could be the actual black swan occurrence. Cathie Wood comes upon data that she believes supports her arguments. According to her, the M1 money supply in the markets is beginning to drop following the massive expansion that has occurred since the pandemic began. Part of this monetary reversal is attributable to rising interest rates and the Federal Reserve's quantitative tightening as it reduces its own balance sheet of assets. M2 money growth has also slowed from 27% in April to 17% in May. Wood on interest rates. Bond prices could have risen due to an increase in the money supply, and the decline in prices and rise in rates could indicate money exiting the bond markets. The Federal Reserve's bond purchases may have been a driver of lower rates, and its reduction in purchases may have been the source of rising yields, indicating deflationary pressures in bond and debt pricing. Cathie Wood anticipates additional inflation in the short term, followed by deflation after a few more months of inflation. Cathie expects that oil prices will fall by more than 84% from their current levels to $3 to $17 a barrel in the future years as electric vehicles become the preferred mode of transportation for the majority of drivers during the next decade. This is why she's been a Tesla owner for a long time and has invested in the electric vehicle sector. She believes that OPEC countries artificially maintain oil prices high by not producing at full capacity to fund their budgets, thereby destroying demand with the price. High oil prices are causing customers to reconsider what type of vehicle they buy, how far they reside from their job, and whether they utilize public transportation. According to the US Dollar Bullish Index, the US dollar is also gaining purchasing power against other fiat currencies. Consumer goods consumption is down approximately 3% month-on-month, with non-consumable goods down approximately 0.05%. The utilization of services has increased by only 0.04% month-over-month, indicating a loss of economic growth. Housing starts have begun to fall, and existing home sales have fallen for several months in a row. Most commodities chart prices have likewise fallen by more than 20% since their peak. She is one of the very few portfolio managers who predicts deflation rather than hyperinflation in the next months. But now comes Jack Dorsey, the founder of Twitter and digital payment provider Square, with a prediction straight out of 1920s Weimar Germany: hyperinflation. Their debate is captivating and amusing to Wall Street, which broadly agrees with the Federal Reserve and the Biden administration that today's inflation, the Consumer Price Index (CPI) is up 5.4% year-on-year, is a temporary phenomenon fueled primarily by pandemic-created supply bottlenecks and pent-up demand. The current inflation rise, according to Treasury Secretary Janet Yellen, will extend until mid-2022 before returning to its normal level, which would be just below 2%. The Dorsey-Wood fight began when the corporate executive tweeted, "Hyperinflation is going to change everything. It's happening." In a subsequent Twitter message, he stated that the CPI might reach 16% in the United States and globally. Wood responded quickly on Twitter, claiming that deflation was more likely due to technological innovation, which enhanced productivity and also pushed out enterprises that couldn't keep up with the rate of change. In terms of the recent behavior of value stocks, especially those we believe are in harm's way, compared to the severe drawdown of innovation stocks, I like the setup very much, Wood said. Do you think Cathie Wood might be right about the change in the market, or are we going to see the market collapse? Let us know in the comments down below. Make sure to give this video a huge thumbs up, subscribe to our channel, and hit the notification bell for more videos from us. Thank you for watching, and we'll see you next time.